Very good afternoon, everyone. I'm Florence from the Institute of Banking and Finance, and we are delighted that you are able to join us this afternoon for this IBF Masterclass, jointly organized with Lightbulb Capital on machine learning and its ethical use in financial markets. We're glad to have with us today the founder of Lightbulb Capital, Daniel Laval, who will take us through the 5 milestones of the use of machine learning in financial markets and help us to understand its application in financial services. He will also touch on the ethical use of AI in financial markets, including fairness, privacy, transparency, explainability, and accountability, as we learn how to apply these concepts on the trading floor. Now, before I invite Daniel to share his insights, for those of you who may be unfamiliar with IBF, allow me to do a very brief intro on the IBF and the resources we have to help professionals in the financial industry. The IBF was established by the MAS in 1974 as a training provider to provide functional training for the financial industry. Since then, our role has evolved into one of standard setting for financial services sector's skills and competencies. In August 2018, our mandate was expanded to cover career advisory and job matching functions for the financial services sector. We were also appointed as the Jobs Development Partner for the financial services sector last year by the Jobs Development Council and now oversee both jobs and skills development in the financial services industry. Here's a quick look at our services and how we support the industry across training, recruitment, and workforce transformation. You can find out more about our services and connect with us on any of these areas via our website. Since last year, we have also put in place enhanced training support for the financial industry to alleviate training costs during this period. The enhanced course fee subsidies are part of MAS's support package to sustain and strengthen capabilities in the Singapore financial services and fintech sectors amid the current economic downturn. The aim of the enhanced training support is to encourage more companies to send their employees for training and upskilling so that they are in a better position to help the company move forward when economic activity normalizes. Enhanced training support, which was to expire by the end of this year, has now been extended. Training costs under IBF recognized training programs will be at 90% from 1st of July to 31st of December this year. This will go down to 80% for trainees below 40, while remaining at 90% for trainees above 40 for the first 6 months of 2022 before going back down to pre-crisis levels. To encourage companies to continue sending their staff for training, training allowance will also be given for company-sponsored trainings this year. You can find a list of eligible training programs on the IBF Program Finder on our website. And in addition, the IBF will also be supplementing the commercial training available with free webinars during this period to support the training needs of the industry. Financial professionals can also tap on the Learn at IBF mobile learning app for bite-sized learning at your own leisure. All these complimentary training are accorded with non-core CPD hours. And that concludes my short intro. I'll now hand the time over to Daniel as we examine machine learning and financial services. Over to you, Dan.
Hello, and thank you so much for the quick introduction. So we have just under an hour for a topic that can fill not one PhD, but probably multiple. So we have to really condense it all. But I hope that we will have some time to also have a bit of a discussion. So it's not just a one-way sort of a conversation, but you can also ask your questions. Okay, so let me try and see whether I can share my slides and then we get going. All right, I hope that you guys can see my slides now. All right, let's get started. So most of the time today, I'm going to spend talking about the ethical use of AI in financial markets. But before we start there, we need a little bit of setting the scene. So let me show you what I'm going to talk about today. So this is my agenda. quickly introduce myself and my co-author. You'll see why there's an author there. Then I'll talk about what machine learning really is, and then about the interesting topic, right? Who needs to control who? We'll spend a little bit of time on that. And then also what governments, including the Singapore government, have done to move us towards the ethical use of AI, not only in financial markets, but also in general. And the sort of core of my presentation for you today is really to discuss these 5 principles and how we can actually apply them in the context of financial markets and a trading floor. Okay, and then we'll conclude and hopefully have some time for questions, and I can try and answer your chat messages, or if you want to speak up, I think that works for me too. All right, let's get going. So most of what I'm going to talk about today actually comes out of a book chapter that I had the pleasure to write with Tiffany Wong. This is the book, you might have seen it in Kinokuniya or elsewhere. And it's quite a good book actually, because it's like a long list of different topics in AI discussed in a very short and readable format. So you can obviously have a look at that if you like the presentation. That's just one page about me. Some of you might have heard me or seen me before. I'm quite active on LinkedIn. If you want to stay in touch, please also join my community on LinkedIn. I teach about fintech and blockchain and all of these emerging technologies in Singapore Management University. And then obviously we're partnered to IBF with Lightbulb Capital, where we help financial services firms deal with what we call the faster future, some place where we need to make use of all these technologies and improve the financial services ecosystem. Traditionally, I spent 15 years inside of different banks, and 2014, I stepped out to start Lightbulb Capital. And of course, I'm an active researcher as well, so it's not just me thinking at home, but I'm also contributing to literature and academia and all of that. All right, now this is Tiffany. So Tiffany is my co-author in the book chapter. She's now with Revolut. When we worked together on the chapter, she was still in PwC and arguably understands machine learning a lot better than I do. A very, very intelligent young lady, you can see from her education. Yeah, when I have questions about how something works in statistics, probably I'll go to her. Okay, now let's think about a little bit what machine learning is. And I think in the context of what we're talking about today, which is financial markets, there are a few misconceptions. So machine learning really is all about systems that have this ability to learn and improve on the back of this experience of new data without having to be explicitly programmed. And what that really means is that these systems are the exact opposite of what we call expert systems. Expert systems basically have an answer for any possible scenario, and therefore they are rule-based. But then machine learning basically works differently. You feed the system new data, and then on the back of the data, the system will adapt and learn and improve. Okay, so what that means is that in the context of financial markets, machine learning is not necessarily algorithmic trading. Okay, algorithmic trading can be based on machine learning, but also can be based on an expert system. Okay, so that's kind of one interesting takeaway. The second one is that machine learning is not necessarily the same as what we call HFT or high frequency trading, because high frequency trading, again, also can be quite static. That doesn't mean that some of the high frequency traders do not use machine learning techniques. That is totally possible, but it's not a must. Okay, very important. The second sort of big area in AI that is relevant in our context in finance next to machine learning is natural language processing. And natural language processing, or NLP, is very much about how computers can process and analyze large amounts of natural language data. Yeah? That could be text, that could also be voice or a speech or some recording. And you'll see why that is important, because there's so much data to make sense of all of it. we're not always in the lucky situation that we have numbers to crunch. Sometimes the qualitative information is inside a text. And then how do we extract that information from the text? That is what natural language processing is all about. All right. Let's try and interpret a little bit what this graph might tell us, okay? And this is your first opportunity to perhaps contribute in the chat if you want. Let me see whether I can even see your chat. I can see the Q&A, that's good. I'll try. So here's the question. We have the x-axis, which is obviously time, right? The years 2009 to 2012. And then we have the y-axis in zettabytes. Zettabytes is a very, very large amount of data. And my question to you is, what does this graph tell us, right? We've got a blue line and a red line. What's the message behind this particular graph? If anyone wants to comment on chat, that'd be awesome. Let's see, I'll give you a little moment. If you can access chat, that would be great. I will try and ping you a message. Hi. Who wants to give this a shot? How do we interpret this chart? Any ideas? Okay, data size, seeing time. Yeah, that's right? It shows what's going on with the data size. And obviously one takeaway from that is that the data size seems to be growing over time. And Efi from ANZ made a very good point, and this is, I'm actually just waiting for that. Thank you very much. It's a bit of an unfair question that I asked you here, right? Because usually a good graph has an explanation about what the red and what the blue colors actually mean. And I omitted that. And I omitted that intentionally. Okay, so now let me share with you what red and what blue means. Oh, there are other, yeah, there are good comments as well. Philip, good to see you. And Chun Guan, yeah, huge amount of untapped. Yeah, that's true, all true. So let me explain a little bit. Structured and unstructured data, Tony says. Yes, that is correct. And that's the point, right? So the blue line is basically the data that computers cannot process over time, okay? Cannot understand, cannot interpret. And the red line is basically the exact opposite, is all of the data that computers can understand. And two interesting points here, right? Around 2014 or 15, for the first time in mankind's history, we see that the data that computers can interpret or understand is larger than the amount of data that computers cannot understand. And from then onwards, it's just this parabolic exponential sort of curve, right? For the data that computers can understand. And then the blue line seems to be tapering off. I don't know, this is a little bit older, the chart, but the message should be very clear. If you compete in financial services today, and you have two companies that are exactly the same, right? Right amount of people with the right intelligence level and right geographical distribution and right balance sheet and right like regulation, licenses and all of that. But one knows how to use machines to interpret data and the other one doesn't. Then the one that doesn't is automatically at a huge disadvantage. And that's why I'm very happy that you came today, because I think it's very important to understand how we can leverage data science and machine learning in the context of markets. Okay, excellent. Thank you for all your comments as well. I know that I'm brushing over a few, but in the interest of time, I want to move on. So thank you for answering my questions. The worst thing for a lecturer is always that there's no answer. So good job. All right. Now, let me briefly introduce to you what I call the 5 milestones in the use of AI in financial markets. Okay. So the first one has to do with this gentleman. And I don't know whether you have already seen his face or heard about his life, but he is basically a gentleman by the name of Jim Simmons. And there's a nice autobiography by Greg Zuckerman, who is a journalist in the US. And Jim Simmons basically is the most successful investor of our times. And the reason why he's the most successful investor of our times is twofold. One, the fact that some of you might not have heard about him, means that he's very good in keeping a low profile, because he realizes that markets are all about information. So it's good that people know less about him. And the second thing is that he was the first person who, in 1982, when I was about, 4 years old, he already started using machine learning to make sense of all of the trading activity in the markets. Okay, and if you compare his success to, let's say, his track record, right, to Ray Dalio or Warren Buffett, they all look like they don't know what they're doing. He's way beyond them, right? So very, very successful, and very much focused on using machine learning techniques. So I think that was the first real milestone, because if you think about computers in 1982, they didn't look like our computers today. Arguably, my phone, right, could probably do more than what Jim Simmons had to deal with in 1982. What happened next? Next, the industry understood that there is alternative data. So up until a specific point in time, basically there were two types of data that analysts could really work with, right? There was data that companies would issue in the form of a financial report. And then on the other hand, you would have time series data that an exchange would spit out. And those were basically the two sources, right? Maybe news as well. But now there's this explosion of alternative data that can help us understand the markets better, right? And we don't only need machine learning to make sense of it. We probably also need NLP, as I discussed earlier, but it goes way beyond that. So for example, most prominent example, I'm sure some of you have heard of it, is this data science company that basically monitored the car parks in front of Walmart to predict quarterly sales of Walmart. So what they would do is they would leverage satellite imagery technology to, take pictures of the car park in front of Walmart. And if the car park is full, then that means good quarter. And if the car park is empty, that means bad quarter. Gets a lot more sophisticated than that. There are companies who can estimate the amount of oil in an oil tanker depending on the shadow of the oil tanker on the ocean, for example. But it's almost limitless, right? There are so many new data science companies that help investment managers to understand all sorts of new types of data. All right. The third thing has to do with a particular individual, actually, the third milestone. And that is this gentleman appeared, Marcos López de Prado from Spain, has 2 PhDs, and he's added a lot to the development of use of AI in machine learning in markets, because not only he wrote interesting books, but he also conceptualized how do you actually use machine learning in a safe way. And what that means is, how do you not fool yourself? Because and I think, well, I don't know if it's him or somebody else who said, machine learning is basically like a machine gun. It's very effective, but if you put it in the hands of a toddler, it's very dangerous. So he helps us to be, careful in how we use some of these techniques in order to not fool ourselves. And one of the most prominent things that he did is he basically created this concept of a deflated Sharpe ratio, which adjusts your result, your back test result, by the number of trials. Yeah, because there's a probabilistic issue there where if you test enough, you will eventually get one back test that looks great, and then your Sharpe ratio looks fantastic, but it will likely not work once you implement that investment strategy. So if you're interested in that sort of topic, I highly recommend anything that he's written. There's probably a whole bunch of it available for free on the internet, or you can just go to a bookstore and pick up his books. Okay, let's move on. Number 4 in my little history lesson on markets and machine learning is this very important paper in 2018. You can see not so long ago, 3 years ago, 4 years ago. What is it? This paper entitled Empirical Asset Pricing via Machine Learning has one very, very important insight. And it's a little bit aligned with what we're talking about earlier when we're looking at our two different graphs, right? The exponential one and then the other one. The key finding of this paper is that machine learning can help us to understand expected returns better than traditional forecasting methods. And what that means, again, is that if you have two investment managers and one knows how to use machine learning and one doesn't, then the one that doesn't is automatically at a huge disadvantage, because these scholars now have proven that people who know how to use machine learning will understand expected returns better. Let that sink in for a moment. Please also take a screenshot if you want to read the paper. I think it's available for free on the internet. Very well worth reading, goes through a number of different types of machine learning approaches as well. So it's a really good read. And then what happened now that all the experts seem to have agreed on how to do it all in machine learning and eventually got very rich, something else happened. Number 5, arguably the most interesting milestone in my little history lesson. And I'm not saying that because I'm on that slide, not at all. But what happened in 2019 is that Kaya, the alternative investments organization, launched a new institute. And with this new institute, the FDP Institute, they launched a certification for everyone to learn about machine learning in markets. Okay, it's called Financial Data Professional Certification. And it's very good. It's a hybrid learning kind of experience where you need to take a bunch of programming classes and then you read a whole bunch of materials that they carefully select for you, and eventually you sit the test and then you pass or you don't. And that basically means democratization of this skill around machine learning and the use of AI in markets. Yeah? Let that sink in for a moment. It's quite meaningful. Think about it this way. In the past, we need a bunch of very smart PhD level folks somewhere in the basement, right? It's very difficult to talk to. Now, basically, with the advent of Python technology, lots and lots of people can learn how to apply and use machine learning in the context of financial markets. Little story. I tried to take this test and I was very self-confident. I thought, I've been in financial markets for about 20 years. Of course, I can just read the materials and then sit the test and then that's it. So I did that and then obviously failed. And then I thought, okay, probably I have to learn more, put a little bit more effort into it. So I wrote my notes. I think I wrote 260 pages worth of notes. For each learning outcome, I had a bit of a commentary. And I read and read and read and reread that. And I was so ready to take the test. And then 3 days before my test, they call me and they say, oh, we closed the test center because of COVID. And I'm like, oh, no, what do I do now? And they said, no, but don't worry, you don't need to pay the extra fee or anything. You can just take the test whenever it opens again. So our next sitting is in November, this is around April time. And I said, I don't really care about the fee so much. Can you imagine retaining all of that information in your head? It's very difficult. So I kept studying for another 6 months. And then when I took the test in November, when the test facility opened again, finally I passed. So that's my little story to that picture. But please explore. And if you try to learn about machine learning, I think this is a really good way to get started. Okay. All right. Now, let's talk about ethics a little bit. And isn't ethics and financial markets in itself a little bit of an oxymoron? I don't know whether you've seen this movie called The Hummingbird Project, but basically it's a movie about two brothers who build a fiber connection between a rural exchange in the US and I think Chicago or New York, I'm not sure, to extract 1 microsecond of latency 'kay? And I think that's why the movie is called Hummingbird Project, because it takes a hummingbird about a microsecond to flap once, 'kay? By the time they finish the project, somebody else has already used new technology to improve the latency situation further. So why am I telling you about this movie? Is because there's this inherent thing about, oh, we gotta be as unfair as we can in markets without breaking any rules, right? So that's why I think it's an interesting topic to talk about ethics in this context of machine learning. But let's talk a little bit about, what's going on here really. And I am borrowing 2 quotes from 2 industry experts. Okay, the first one is a managing partner at a hedge fund here in Singapore called Modular Asset Management. Matthew Cannon has been in markets for over 30 years. I think he ran the markets business in HSBC for a very long time. And this is his quote: "Humans have found it impossible to encode ethical standards in finance. So we generally get principle-based guidance like do the right thing." And I'm sure if you work in a financial institution, you might have heard that sentence many times over. "It will take AI a long time to learn the difference between right and wrong on matters where human experts often disagree." Okay, so basically what he's saying here is ethical use of AI, forget it, like it's impossible. Even humans can't do it. How do you expect machines to do it? Second quote, and you might recognize that name. This is also a picture of him, Marcos López de Obrador, in front of the Senate in the US, our specialist that came up and thought about, how to use machine learning in markets so often. And what he basically says is very different. He says, financial transactions are fraught with agency problems. Machine learning or no machine learning. One solution is to replace human judgment with smart systematic processes. Another solution is to deploy algorithms that monitor human decisions in search for the biases. In both cases, AI has an important role to play. So he's basically saying the exact opposite. He says, markets are so broken already. If we don't start using machine learning, there's no way that this situation can improve. And that's when Tiffany and I said, okay, if 2 experts with so much experience have fundamentally different views on this topic, it's probably a very good idea to investigate a little bit further. And that's what we did. And that's what I'm going to spend the rest of my little presentation to you about. Okay. So what do governments do? Well, actually loads. Different countries start issuing different types of manuscripts that talk about how we can use AI and machine learning in an ethical fashion, whether it's Hong Kong, whether it's the European Union. Obviously in Singapore, we have MAS coming up with the FEED principles that are very useful to read. So if you haven't done that, then please also take a look. I'm not sure whether I have it on this deck. Yes, see, even China has issued the Beijing principles. And what's interesting to learn about the Beijing AI principles is that the content is not too different from what everyone else is saying. Yeah. So all of these documents, there's a very large overlap from a principles sort of a basis. And that is actually encouraging because it means that everyone is sort of running in the right direction. But there's one issue with all of these documents, and that is the issue that we try to resolve or where we try to get the conversation started a little bit in the context of financial markets, and that is operationalization. Yeah, operationalization of these different principles. Because if I told you today, oh, you got to be fair when you use machine learning in markets, what does that even mean, right? Oh, your machine learning is going to be explainable. What does it mean? So where I hope that we add a little bit of value with the book chapter is to explain in the context of a trading floor, what do these principles actually mean and how do we think about them and how then, if we understand how to think about them, do these principles apply to other related situations? Okay. So let me go through them one by one, actually. We have enough time. The first one is fairness, right? And what is fairness? Well, fairness is treating stakeholders impartially and just, without taking unfair advantage of them, right? And basically, fairness is like the age-old thing in markets, right? Is probably as old a concept as financial markets themselves. But then, what's the problem? What's the problem here, specifically in the context of machine learning? So one type of machine learning algorithms is called reinforcement learning algorithms. And if you haven't heard about this term, then that's okay. Let me try to explain briefly what a reinforcement learning algorithm actually does. Think of this reinforcement learning algorithm as an agent that has a little account of, I don't know, brownie points. And whenever the algorithm predicts something correctly, they will get one more brownie point, and they keep track of their brownie points. Okay, when they take a wrong decision, they will one brownie point will basically be removed. And over time, what that means is the reinforcement learning algorithm learns what good decisions look like, and then what bad decisions look like. And over time, they try to improve the ratio of good decisions versus bad decisions. Okay. So far, so good, right? But what's the issue then? You can already imagine that, if there is something that gets me more brownie points and I don't have a conscience, and algorithms don't have conscience, then I will just optimize to get more brownie points, right? Whether that involves any sort of rogue activity that human traders go to jail for, whether that is spoofing or wash trading or pump and dump schemes or any type of fraud running activity. As an algorithm, I don't really know about that. So what is our recommendation here? The recommendation is really that we need to define some boundaries and basically delineate very clearly what is fair and what is unfair activity, right? And that maybe needs a bunch of rules so that this reinforcement learning algorithm knows its borders or its the field that it can play in safely, okay? And if you think about that, and it's kind of a reoccurring theme of my presentation, as you will see, this is not too different to what we do with human traders today, right? We have a compliance handbook, and we tell them, these are the things that you're allowed to do, and these are the things that you're not allowed to do. And then please play within these boundaries. Right? So what we're suggesting here is to create these boundaries in a digital fashion, very similarly. Okay, that's fairness. Now, privacy, also a very interesting topic, I think. What's the definition? I looked it up in the dictionary, as you can see on the slide. Someone's right to keep their personal matters and relationships secret. Okay. I think we can all agree that in centralized financial marketplaces, our right to keep our data private or secret even is not always a given. Yeah. I think just one example, I think, and this is, you got to believe me, we compiled this book chapter before there was this very big hack in Hong Kong. But in 2018, Hong Kong Central Bank already reported that there's so many more cyber attacks on financial institutions than before. And I think in late 2019 or early 2020, the Hong Kong Stock Exchange actually got attacked successfully by a hacker. So you can easily see how hackers will basically use machine learning to exploit unfairly, obviously, these capabilities that they have in the markets, yeah, by using data that is not meant to be seen by them. So if, for example, these hackers would get access to data that relates to ultimate beneficial ownership of people in financial services institutions, that could probably be quite useful, right? And if they illegally obtain that sort of data, they can probably cheat. Yeah? So privacy is a very important topic. And well, how do we go about it? Right now that we're all digital and interconnected, we need to think about something. We cannot just say, oh, well, then we just build a bigger firewall. That's kind of not good enough. So what do we do? Well, one piece of technology that we could use is what we call a zero knowledge proof. And for those of you who are perhaps a little bit more familiar with blockchain, you might have heard the term, but for those of you who haven't, let me try and explain briefly what a zero knowledge proof is. And I do need my employment pass for that. Imagine the following situation. You go, what is a recent movie? You go to watch James Bond. And James Bond probably requires you to be of a certain age to watch that movie. So when you get to the counter, there will be a person behind the counter who asks you for your proof of identity to verify your age. And then what do? You show them, most likely, right, your employment pass. I'm just looking at mine and I'm trying to understand what data am I revealing when I show them my employment pass. So there's my employer on here, my first name, my last name, my PIN number, what else? My date of birth, very sensitive. Not really, I already told you. I was 4 at 1992. My sex, my nationality, my fingerprint is even here. So there's way more data than what the person behind the counter needs to see on this document, right? And that's kind of where a zero knowledge proof technology comes in. The zero knowledge proof technology basically allows you to verify a specific data point without revealing the data point. Sounds a bit funny, right? But let me explain a little bit further. So what's the, let me ask you this question actually. What's the key information that the person behind the counter needs to know? Maybe you want to put it on chat. So you are dying to go to James Bond movie, and then this fella stands in your way, right? And he says, no, I need to verify your age. So what's the actual data that he needs to know to make a decision to let you in or out? Okay, so a couple of you who say your age, yeah, and that is correct. If we are very specific, right, we basically can elaborate a little bit on that, and we can say, actually, he needs to know whether I am older than whatever the limit is or younger, right? And it's a binary thing. It's 0 or 1. Either I'm too young to attend or I'm old enough and then I can get in, right? So what I want to say here is that a zero knowledge proof gives us the opportunity to verify data without revealing the data. So to that person, doesn't really matter whether I am, let's say the limit is 16 or 18, right? If I'm 19 or 67, it doesn't really matter. I'm above 18, and then I can go and see my movie, right? So this is an interesting technology that we can use in the context of markets to basically reveal information at a lot more careful way and a lot more secure way. Okay, that is around privacy. Let's continue. Let me see whether I can continue. Here, transparency. Let's talk a bit about transparency before. So transparency, we looked it up, is the quality of making something obvious or easy to understand. And that is quite a problem in the context of machine learning, right? Because if you know nothing about it, you probably just think, oh, this is very complicated computer stuff. So in our context in finance, it really refers to what the public's view is on AI and what it can do, and how that actually is aligned with the reality. Because people have wild imagination when it comes to AI and machine learning, and all sorts of things are suddenly possible, but perhaps in reality they're not, right? So there are also limitations around what machine learning can and cannot do. And I want to introduce a brief example to you that kind of outlines quite clearly what the issue is here, okay? In 2018, a AI hedge fund, whose name I cannot pronounce, but it's this one on my slide, Hong Kong-based fund actually, lost $20 million of investor money. And of course, the investor sued the fund manager, right? And said, how's that even possible? I thought you have a machine learning algorithm and it's risk-free, basically, right? So what's the issue here? The issue is the fund salesperson has probably not told the truth when it comes to the capabilities and the risks disclosures of this machine learning investment strategy. And the investor was probably not equipped at all, actually, to understand anything around machine learning. So these are two issues that we can tackle, right? We don't know what the outcome is actually, or I haven't looked it up in a while, but what becomes very clearly is that there is an expectation gap between those two entities. So then how can we resolve this issue that has to do with transparency? But basically, two things. So I think for a fund management company, probably there are more disclosures required than the ones that we disclosed today, to be more transparent around, you know, what the risks actually are that come when people use machine learning in financial markets. And then similar to what we used to have, I remember I come from Germany, and Deutsche Börse, our exchange, would always run seminars on derivatives for the public, for people to understand how calls and puts and all these other derivatives work. And I think we could have a similar sort of sharing session or educational session where investors get educated with regards to the fundamentals of machine learning techniques and how they can be applied in the markets. Of course, most of these products would not be available for sort of not accredited investors, but to have, and you know, an accredited investor can buy anything because you can afford to lose everything you put down, but that's not really the point. The point is, how do we increase the awareness? You know, you don't need to do that whole certification thing, but you need to understand the key risks and issues that have to deal with machine learning in the markets. So that would also help us understand how, for example, topics like bias are very crucial in this context, right? Machine learning algorithms often have display large bias and then take the wrong decisions on the back of that. So how is that managed is probably a good question for an investor to ask a machine learning fund management firm. Okay, transparency. We've got 17 minutes and we've got a few more things to go through. So let's talk about explainability next. So explainability is the ability to explain in a rational, explain the rationale, sorry, behind an action, right? In our case, obviously, is why did you buy that thing? Why did you sell that thing? So that other humans can understand what's going on and have some sort of trust in the person who talks to them. Little side note, you can imagine that the more complicated an IT system becomes, including those that are based on machine learning techniques, the more difficult it is to explain. Yeah. So if you have very, very complicated system, explainability level is probably very low. If you have a very simple system, explainability is likely to be higher. This is important to understand. So what's the problem? Well, the problem is there's lots of ambiguity around what is good and bad, as it were, right? So imagine this situation where you have an investor, you're the fund management company, you have an investor, and they will tell you, you know, I'm not investing in defense. And as you sort of put together his portfolio, you take note of that preference and say, okay, I'm not going to buy any sort of defense-related equities, for example. But then the strategy that this investor invests in still uses machine learning, and upon an act of war, basically the algorithm decides to do something that may or may not be to the liking of this particular investor, right? Shorts a particular stock, maybe airlines. If you remember September 11, 2001, those huge profits for those who have shorted airlines, right? So, it's not defense. Airline has nothing to do with defense, but then you're still profiting from this sort of act of war situation, right? So is that okay for the investor? Can we explain why the algorithm actually took this decision? Yeah, and we don't really know whether that investor's moral compass allows them to take that profit or not. But I think what is key to do to understand these sort of extreme situations better, and then to be able to explain why the machine worked the way it did work, is to regularly stress tests, even extreme scenarios. Yeah? And what that means is that we will get more insights about the behavioral patterns that can eventually lead to certain investment decisions that these algorithms take. Okay, and I guess one thing that I also wanted to highlight is, let's be very clear. Humans also are not always 100% explainable. Yeah? So to aim towards is almost like a little bit with COVID, right? To aim towards like 100% explainable machine learning algorithm might not be the right objective. The right objective is to say, can we understand it enough so that we can manage the risks appropriately, right? And if you, for example, you're the head of markets in a sell-side firm, you do have a risk that one of your traders goes rogue. And I worked in 2 organizations where that happened while I was working there. I can tell you it's a very uncomfortable situation. You don't know whether you're all out of a job because the guy gambled so much money away. This is a residual risk that we have, whether we use machines or whether we use humans. That residual risk will stay. Okay. All right. One more, accountability. Very interesting, and there's loads of interesting conversations actually around accountability and how machine learning algorithms now need to take trading exams and all of that. So I have very distinct views about that, but let's go bit by bit. What were we talking about here? Accountability is the ability to hold an individual or entity accountable for some sort of act. Yeah? And that also includes that this person has to maybe admit that there was an issue upon their act. And I think accountability and explainability are quite interrelated, yeah, you can already tell. So if a decision is explainable, then it's probably also easier to make sense of the accountability portion. But what's the problem here? Well, the problem is, AI in the end of the day is an enabling technology that is used by a licensed financial service provider. And in my personal view, all of this thinking around, licensing or asking whether a machine learning algorithm that trades the markets has a permit to do so is a bit nonsensical, right? At the minute, at least at the level of sophistication where we're at. Because right now, MAS regulation is very clear. For each of your CMS licensed entities, whether that is dealing in securities or capital markets products, or whether that is fund management, you will have a CEO and probably another executive director that take full responsibility and are accountable to conduct orderly business. Yeah? So if there is an issue with a machine learning algorithm in one of these CMS licensed companies, in our context here in Singapore, and you can't really go after the algorithm, you will have to go after the principles of these licensed companies. Yeah? So I guess key recommendation here is, if you're one of those two, right? If you're the CEO of a licensed company, what do you need to do? Well, you need to have some sort of data policy to limit the risks that are related to these data-related matters. Because remember from the beginning, we talked about how machine learning algorithms learn from data. So if the data is patchy, sketchy, or has any other sort of issues, then you can expect that the risk of the machine learning algorithm taking wrong or weird decisions is higher. Yeah? So data quality is very, very important for accountability. So you want to make sure that you have the quality and also the integrity sorted out for your data. I think what's very also important is to understand that the severity and probability of potential harm are sort of two different things. And I think I have another slide on this. Let me show you. So this is kind of how to think about this. There's probability of harm and severity of harm, right? And of course, if we're down here, low severity and low probability, that's sort of comforting. And if both are high, then it's obviously the worst case. But it's more these two boxes that are more interesting, right? So what do you do with high severity intents that are very low probability, right? These are sort of your black swan type of situations. And then what about high probability but low severity, right? You already know that there are so many of these that you will probably have to face them. So then what you want to do is have very solid processes on how to resolve these issues. You can't apply the same sort of risk management tools to all of these four, right? That would be very wrong. Okay, now, in conclusion, and you hear me say this all the time, pace of technology and data-related change accelerates. Almost as much data as we have, right? This change accelerates. Machine learning is actually not an emerging technology anymore. Way too many people are already using it. And now with the launch of FDP Institute, everyone is just gonna start using Python as opposed to Excel. Of course, all of this technology is not free of ethical risks. So these need to be managed carefully. And basically what we try to do with the little book chapter is start the conversation about how to operationalize some of these ethical principles in the context of financial markets. Here are 3 books that are interesting to read in this context. There's another book by Marcos Lopez de Prado, which deals with perhaps the investment management side specifically. That's the one on the right. There is one in the middle talking about the ethical algorithm, not so much focused on financial markets, but more the sort of world of consumer technology, but also very interesting. And then the left one is really a textbook. So if you have lots of time, are good in math, it's quite thick, but it's a good book that really discusses how to use machine learning in finance in a practical fashion. Okay, lots of code examples in there as well. I'm not done yet. My conclusion continues. So if we have these operationalizations for the different principles, one thing is very important to remember. Yeah? We should not implement more rigorous controls for AI than the one that we implement for humans, because that can easily lead to a situation where you stifle innovation and then you fall behind. So that's not good. And I like to always close with my friend's quote here. You can tell from the picture that he's obviously a very tech-focused gentleman. He says, "I see no distinction between AI and people, since the latter are just biological AI." And of course, that can be controversial, but it's probably more true than we all know. So with that, I wanted to highlight one last thing before I go, or we have like 5 minutes for questions. And that is that all of this tech stuff, you can't really leverage without the right culture in your organization. We put together this little triangle in my firm a while ago, where you basically have technology like AI and blockchain and data science on top. And then to implement it, yeah, you need some sort of methods. You need that layer in the middle, right? You can talk about design thinking or lean startup or agile. But actually, all of that is irrelevant if you don't have the right culture in your firm, a culture that has an open mindset and that basically enables you to experiment. And if you want to learn more about that, I just want to quickly highlight there's a course that teaches, my colleague is teaching, is called the Innovation Culture Catalyst. And it's an IBF accredited program. So if you go to the IBF website and you key in Innovation Culture Catalyst, you will be able to find that program. We've delivered it for many different financial services companies here in Singapore. From I tell you, this is how diverse the groups are that take this course. Okay, so one client was basically a number of new joiners, where the head of learning and development thought this is a great introductory program for our new hires. And then the other client basically said, okay, everyone at the managing director level who works for the global head of the department needs to embrace innovative culture more. So, it's really for very, very different types of groups of folks in the financial services industry. Okay, and with that, I guess we have a few minutes to Q&A. So I'll leave my contact details here. Justin is asking, how do we differentiate HFT, quant, and AI? Okay, that's actually a great question. And my first intuitive response to that is, do we have to? Because, you could argue that there are many activities where these three things sort of coexist, right? High frequency trading might use machine learning techniques to take certain decisions. Quants might do that as well, but they don't have to, right? So I think sometimes with these sort of statistical methods in the broader scheme, I'm not really a friend to say, oh, we gotta clearly say, is it this one or that one? Because there is so much overlap. Huh? Okay. Any other questions? Anything else that you may wanna ask? Something where you completely disagree? That would also be very interesting. Any other things that I can help you understand better? There's another question. How would machine learning or AI be used in FI where there are circumstances that require discretion? Oh, very good question. And this is so let me just ask, discretion, do you mean that in a sort of a trader sense where you have some leeway as to how to execute a certain order? Or do you mean it more from a privacy perspective? I'm guessing you mean the privacy perspective. So if that's the case, then I'll try to answer that. Basically, it's very important that the data that is being used is only the data that is actually required, right? But because we can assume that we all share way too much data about ourselves all the time. And that is why I talked a little bit about this concept of a zero knowledge group, because we have to sort of move away from that because otherwise large tech companies unfairly take advantage of us. So that is sort of an important thing to think about. There's another question. Has any corporate been taken to task for non-ethical use of ML? If yes, what was it used for? Okay, that's great actually. So I do think that there are some investment management firms that perhaps try to exploit the that basically try to engage in activities that if you were a human, you would also go to jail for, whether that is front running or anything like that. So that has happened, and then there are basically fines on the back of that. Another question around FTP certification. Who are people who can do this? Well, I think the easiest way, Shashank, if I may, is you just go to the website and read the requirements. I think If you've done programming before, it helps, but I think it's really designed for people that have no prior understanding of programming. If you've ever taken Stats 101 class, that's also probably quite useful. But again, if not, I think they have a little tutorial somewhere. Okay, what else? The person designing the AI, business analysts, subject matter experts, understanding on what's actually in the machine performing can be different. Yeah, that's true. What a practical assurance validation process. I find flaws that may not be detected unless rigorous UAT is done. Yeah, that is true. And you know, in my mind, I think the most important thing is to have that sort of stress testing, right? And if you can automate that and then basically take your algorithm in a safe environment and play many different types of data, also edge case data, and see how the machine reacts, that would be reducing the risk a lot, right? And basically also if you read Marcos Lopez de Pablo books, what he's suggesting is that if you want to use machine learning in AI, you have to move away from the individual portfolio manager mentality that has some sort of spreadsheet or technology that tries to spit out some sort of weights for a portfolio, but you create a factory where people with different skill sets, each in their own way, very specific about data cleaning or engineering or algo development, do their own thing, and then they put together something as a collective, rather than having this culture where the portfolio manager is basically the all-knowing person, because that's not possible anymore. Okay, what else? Do you think we should incorporate a data wallet to control as well as preserve our data privacy? I think that's actually quite a good idea, and it's hard to do. There are some blockchain projects that are working on that for personal data, and I think I would love that. That would definitely also reduce the issues that we discussed when we talked about the hacking of exchanges, for example. And then Kenny asks, how recognized or acceptable is MAS in relation to processor learning, machine learning, or AI? Oh, okay, Kenny, good question. The good news is that the feed principles that I was talking about earlier were actually kind of leading. There is also a second document with another abbreviation. In Singapore, we always have a lot of abbreviations. I forgot what it's called now, but it also complements what we put together in terms of operationalization of some of these principles. So that is also very, very useful. And I would say that, as usual, MAS is one of the leading financial regulators in the world. Okay, I'll take two more questions, okay? I take Karen's. Where sources would you recommend to learn more about machine learning? Okay, so one thing, I think, I'm a fan of FDP. I don't have any sort of commercial relationship with them, but I set the program myself and I thought it's quite useful. So that is definitely something you can explore. And then Louis is asking, how effective is ML in finance, given financial trading is essentially a stochastic process? Yeah, I think your answer, Louis, is in the essential, right? So, I mean, there's huge disagreement, I suppose, even at the Nobel laureate level, right? Whether a market is random or not. So I guess that I think probably markets are more efficient than some people think, and they are probably less efficient than other people think. And that's why I think there is still opportunity to basically get signal, even though signal to noise ratio is obviously not very favorable. But people like, for example, Jim Simmons continue to show that there is still some sort of pattern recognition possible. I guess that's my take at the minute. But it gets more difficult as more people get more informed in that way. Okay, great. Look, we're a little bit over time. It was my pleasure to talk to you today. Please stay in touch if you like to do that. Connect with me on LinkedIn. Always feel free to reach out if there are any sort of comments or questions where I can help you further, then it would be my pleasure. And yeah, I thank IBF as well, obviously, for organizing this session. It's always great to collaborate. And I wish you a great afternoon. And then I say goodbye from